2. Rise of banking and double-entry bookkeeping. The Renaissance period, spanning from the 14th to the 17th century, marked a significant transformation in European economic practices, particularly through the rise of mercantilism and the evolution of banking systems. This era not only fostered artistic and cultural advancements, but also laid the groundwork for modern economic theories and practices. Mercantilism emerged as the dominant economic theory in Europe. From the 16th to the 18th centuries, it emphasized governmental regulation of the economy to enhance national power and wealth through trade. Key features of mercantilism included the establishment of monopolies, tariffs to protect domestic industries, and the accumulation of precious metals. As a measure of wealth, this economic system encouraged nations to maximize exports while minimizing imports, leading to increased competition among European powers for colonies and trade routes. During this period, countries like France and Spain implemented mercantilist policies that aimed to control trade and resources. For instance, France developed a strict trade route system that connected its colonies in Africa and the Americas, reinforcing its economic dominance. The mercantilist approach not only shaped trade practices, but also influenced the development of banking systems as governments sought to finance their colonial ambitions and military endeavors. 2.1. The rise of banking. The banking system began to take shape during the Renaissance, evolving from rudimentary practices in ancient civilizations to more sophisticated institutions. The first known banks emerged in ancient Mesopotamia, but it was during the Renaissance that banking began to flourish in Europe, particularly in the Italian city-states like Florence and Venice. These cities became major banking centers, facilitating trade and commerce across Europe. The establishment of the Bank of Amsterdam in 1609 is often cited as a pivotal moment in the history of banking. This institution functioned as a central bank, stabilizing currency and serving as a model for future banks, including the Bank of England. The rise of banking was closely tied to the mercantilist policies of the time, as governments and merchants sought reliable means to manage and transfer wealth. 2.2. Double-entry bookkeeping, a revolutionary innovation. A crucial development during this period was the introduction of double-entry bookkeeping, which revolutionized financial record-keeping. This accounting method, which requires that every transaction be recorded in at least two accounts, a debit and a credit, was popularized by figures such as Luca Pacioli, a Franciscan friar and mathematician. The double-entry system allowed for greater accuracy in financial reporting and helped businesses track their financial health more effectively. The adoption of double-entry bookkeeping was instrumental in the growth of banking and commerce, as it provided a systematic way to manage accounts and detect errors or fraud. This method became a cornerstone of modern accounting practices and facilitated the expansion of trade and investment during the Renaissance and beyond. Conclusion. The Renaissance was a transformative period that saw the rise of mercantilism, the evolution of banking, and the introduction of double-entry bookkeeping. These developments not only shaped the economic landscape of Europe, but also laid the foundation for modern financial systems. The interplay between government policies, trade practices, and accounting innovations during this era significantly influenced the trajectory of economic thought and practice in the centuries that followed.